Paul Volcker tried to fight or did fight inflation, and rates were as high as 15%. And from 1980, they hit 15%, and they've trended down for 40 years. And during that 40-year period, we had this anomaly where bonds only went up and yields only went down. And so that's what we've known for now 40 years. And so that trend is now dead. What happened is it basically hit the breaking point in 2020. And in the United States, the U.S. Treasury, the bedrock of the entire global financial system, I would need $10 million of U.S. Treasuries to make $50,000. Not 500 grand, not 100 grand, but 50,000, which is less than the average, median income in the United States. But it's not just the United States, it's global. And so now rates have been rebounding over the last couple of years. And now people have found out what their grandparents knew is that bonds can actually lose a lot of money. And so what happens when the bedrock of the entire global financial system no longer works? You see, there's another thing that happened at the same time, which is all the developed world have this aging demographic. Back to, I referenced that book, The Demographic Cliff. And so now we have this population, if you look at a chart, the swelling, aging demographic with a smaller, lower demographic. In Japan, for example, 30% of the population is over 65.
I live in Japan.
Okay, so
Wild.
So in the U.S., 10,000 people a day are turning 65. And those people, they need fixed income. And as a Bitcoiner, I think everyone should just go buy Bitcoin. But if you're 73 years old, you got to pay your electricity bill. You need income. And so we have these fixed income markets, and they've depended on this bond market. And so we have pension funds, we have insurance funds that have bought into these bond markets to get the yield to pay their retirees.